Hello everyone and welcome to my channel. Today we will understand how the stock market behaves, the fact that it is cyclical, and more importantly how that translates into an emotional roller coaster for any investor, no matter how new or experienced. This video is not meant to discourage anyone from investing. Quite the opposite actually. My reason for making it is to let you know that you are not alone. This is not financial advice. This is just information to help you do your own research and formulate your own opinion. The difference between new investors and the experienced ones when it comes to this subject is that the latter know what I'm about to tell you. They have a system in place and know how to master their emotions and stick to their predefined targets. As I said previously, the market is cyclical. It has its natural cycles of growth and decline. And each step of the way, depending on where the market is, an investor will experience a different emotion. The simplest rule in investing is to buy low, hold according to your system, and in the end sell high. When Bob starts putting money in stocks and the market is going up, he is filled with optimism. As the market grows, optimism turns into excitement, then thrill, and at full peak when he sees his portfolio at all-time highs, euphoria kicks in. This is the point of maximum financial risk, the critical moment when new investors hyped up on euphoria think the market is shooting up like an arrow and FOMO, or fear of missing out, is in hyperdrive. This feeling will translate in them piling in cash and buying assets at all-time highs just before a market correction is about to happen. This is also the moment when an experienced investor does nothing and enjoys the ride while raising capital for future investments. And then it happens. The market starts to go down and a different set of emotions kicks in. First, anxiety, then denial. Bob keeps repeating in his head what myself and others try to hammer down. Always be a long-term investor. But at this point, that is just a thought and not a true belief. Then fear creeps its ugly head, and that turns into despair. Then panic, and in the end, capitulation. This will never end. I need to sell, cut my losses, and at least keep some of my money. But after doing so, despondency and depression take hold, and many new investors will quit the market altogether. This is not for me. The market is rigged only for Wall Street, or I'm not good enough. But contrary to the general impression, when the market is at its lowest, that is the best moment for an experienced investor to chip in. This is called the point of maximum financial opportunity. During this whole time, Alice dollar cost average into the market while also continuing to put money aside to buy the dip. And this is her moment to shine. Because nobody can time the market, no matter how good of an investor, she started deploying capital close to the market bottom and will continue to do so according to her system. And then the cycle restarts, bringing hope and relief to those investors that hold through the market lows and didn't do the most notorious investment no-no, buy high and sell low. And if you understand all of this before you take the ride, then it will be as fun for you as it is for the rest of us. So what can you do to enjoy the ride as well? Well, during this talk you heard me mentioning multiple times about the idea of having a system in place to guide you. I also use terms like DCA, FOMO, market correction, and buying the dip. Creating a system and explaining these stock market related terms and practices will be our focus in the next videos. We will tackle them and many more one by one so that you can have all the tools you need for your foundation. So don't forget to subscribe and hit the like button so more people like you can see this video and maybe we can become a community that helps each other grow. Kind regards and see you in the next one.